Hi there. Today we're going to talk about something that's been causing a lot of unrest in Kenya lately, the Finance Bill 2024. If you're like most people, you might find government bills and taxes a bit confusing. But don't worry, Money Frontline is here to break it down for you in simple terms using everyday items from our homes. Let's get started. First, let's talk about bread. Everyone loves bread, right? It's a staple in many households. Now imagine if the price of this loaf of bread suddenly went up by 16%. That's one of the things the Finance Bill 2024 might cause because it proposes to remove some value-added tax exemptions on essential goods like bread. This means bread could become more expensive, making it harder for families to afford daily necessities. Kenya's government has scrapped some proposed taxes in this year's controversial finance bill, including a 16% levy on bread after a public outcry. Next, let's talk about milk. The finance bill also includes new taxes on petroleum products. You might be wondering, what does that have to do with milk? Well, think about how milk gets from the farm to your table. It's transported by trucks that run on fuel. If the cost of fuel goes up, the transportation costs go up, and those costs are often passed down to you, the consumer, in the form of higher prices for milk and other goods. Now, let's talk about cooking gas. The finance bill proposes a 16% tax on petroleum products, including the gas you use to cook your meals. This means that the price of refilling your gas cylinder could go up significantly. For many families, this makes it more expensive to cook their daily meals. Another big change in the finance bill is related to financial services. The government plans to remove VAT exemptions for services like money transfers, issuing credit and debit cards, and foreign exchange transactions. So every time you use your mobile phone to send money via M-Pesa or get a new bank card, you could end up paying more. This could make basic financial services less accessible, especially for those who rely on them the most. So why is the government doing this? The main reason is to increase revenue, since coming to office in 2022, President William Ruto has introduced several new and unpopular taxes with the aim of eliminating the country's national debt of nearly $80 billion, £63 billion. The finance bill is part of a larger effort to raise funds for public projects, like building affordable housing. But many people feel that these tax increases will hurt their wallets more than they will help in the long run. For instance, the bill proposes a 2.5% tax on the value of cars bundled with insurance covers. This means owning and insuring a car will be more expensive, affecting both individuals and businesses. Let's talk about housing. The government's ambitious plan includes a levy to fund the construction of 250,000 affordable housing units each year. This sounds great, but the money for these projects has to come from somewhere. The finance bill suggests a housing levy of 1.5%, which means workers and employers would contribute a portion of their gross earnings towards this fund. While the goal is noble, many people are concerned about the additional financial burden this levy places on them. Let's simplify this with a real-life example. Meet Nyairo. Nyairo is a 35-year-old marketing professional living in Ruiru, Nairobi. He earns a gross salary of $800 per month. Currently, Nyairo's monthly expenses include rent, basic items like food, bread, milk, and cooking gas. He also uses M-Pesa for money transfers and has a bank account with a debit card. Before we look at the impact of the finance bill, let's calculate Nyairo's current expenses and take-home pay. From his $800 gross salary, Nyairo has to pay 30% in pay and NSSF, which is $240. So his net salary is $560. Now let's look at his expenses. Rent, 30% of his net salary, $168. Bread, $20. Milk, $30. Cooking gas, $20. Money transfers and bank fees, $10. Other essentials, $100. Total expenses, $348 take-home salary after expenses, $212. Now, let's see how the finance bill affects Nyairo's expenses. Bread increases by 10%, $22. Milk increases by 15%, $34.50. Cooking gas increases by 16%, $23.20. Money transfers and bank fees increase by 10%, $11. New total expenses, $363.70. Take-home salary after new taxes and increased expenses, $196.30. Additionally, Nyairo's employer and he will contribute to the housing levy, which will further reduce his take-home salary. If the levy is set at 1.5% of his gross salary, that's $12. So, with the housing levy, $12 new take-home salary, $184.30. This means Nyairo's disposable income decreases by nearly $28 a month, which might not sound like much. But for someone already on a tight budget, it makes a big difference. So why are people protesting in Nairobi? Many feel that these new taxes will hit their wallets hard at a time when the cost of living is already high. The protests are a way for people to voice their frustration and demand changes that won't disproportionately affect the average citizen. They want a balance where the government can raise necessary funds without placing an undue burden on the populace. In conclusion, while the Kenya Finance Bill 2024 aims to address important needs like reducing country debt, public infrastructure, and housing, it's crucial to consider its impact on everyday life. Understanding these changes helps us make informed decisions and advocate for fair policies. What changes would you suggest to the finance bill to make it fairer for everyone? Do you have any tips for managing increased costs due to new taxes? We'd love to hear your ideas. Don't forget to like, share, and subscribe to Money Frontline for more simple explanations of complex finance and business topics. See you next time.